Hello everyone, welcome back to the earnings review channel. In this video, we are diving into fascinating case study on FCNCA stock call options, both before and after their recent earnings announcement. Before we get started, a quick reminder, this video is for educational purpose only, should not be considered as a financial advice. Now let's jump right in. FCNCA stock options data before the earnings announcements on June 24, 2024. At the end of the day, the strike price is 1980. At this point, the premium for call option was $23.30. So if you bought one contract, the total cost would be $2,330. Now let's see what happened after the market opened on June 25, 2024 around 9:32 a.m. EST. The strike price remained at 1980. The premium had risen to 51.40. If we have one contract, the contract price would be $5,140. By around 9:50 a.m. EST, the strike price was still 1980, but the premium had increased further to 62. If you bought one contract at this time, your total cost would be $6,200. Finally, by end of the day on June 25th, 2024, the strike remained at 1980. The premium would be 100 if you had one contract, and the total cost of the premium would be $10K. Wow. Can you imagine how much profit you could have made if you took a position before the earning announcement and held it until the end of the day? So before market open, the premium would be 23.30, the total cost would be 2,330, and end of the day for the same strike price, the premium would be 100 and total cost will be 10K. So we will get profit of $7,670. Congratulations to those who bought the calls today. Keep these insights in mind for the next FCNCA earnings announcement. If you enjoy this video and want to more content like this, be sure to subscribe to our channel. Thanks for watching and see you in the next video.